Good afternoon, and welcome to the Altitude Group PLC investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time by the Q&A tab situated in the right-hand corner of your screen. Just simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish a response where it's appropriate to do so. Before we begin, I'd like to submit the following poll. I'd now like to hand you over to Nikki Stella, CEO. Good afternoon.
Thank you, Alejandro, and we are thrilled to be with you here today to share with you all of the details behind our record results for the full year of 2023. And with that, I can go into some quick introductions on the team presenting with you today. I, of course, am Nikki Stella, 18 years of executive level experience in the promotional products industry. I've got a track record of identifying and capitalizing on new revenue sources, launching products, services, and driving profitable growth, managing P&Ls. I'm an experienced PLC CEO and board member, and I am truly thrilled to be with each and every one of you here today and tell you our story and truly how we are at an inflection point with the business going forward. So with that, I can hand off to Graham Feltham, and he can give you a quick introduction on himself as well.
Hi, nice to meet everyone. I've been here nearly now 2 years and enjoying every second of it. I'm an experienced, I qualified with EY in 2000 as a chartered accountant. I'm an experienced AIM PLC CFO. I've got experience with Belron, which sold to Glass, StatPro, which was a fintech AIM listed group, and then got taken out and bought out by Confluence. Safety Clean, which is a private equity owned services business with capital machinery and services, and then at Newmark Security, another AIM listed group. Nearly 2 years here now, and really really working well with Nikki. Really enjoy it, and looking forward to take the group further.
Absolutely, and sometimes we get questions about how well we work together. I am based in the US, Graham is based in the UK, and each and every day we spend my morning, his afternoon together, working together on strategy and driving the business forward. And you'll see those results in today's presentation. So next we can walk into driving the business forward at pace and how we have performed. So some of the key highlights this year, we achieved 18.8 million in group revenues. This represents a 57.2% increase over full year 2022. Our gross profit was 8.6 million, a 39.9% increase over financial year 2022. The group adjusted operating profit, 83.4% increase over 2022's results. And then our earnings per share, a 293% increase over 22 at 55p. Our cash balance at the end of the year was 1.2 million pounds. This represented an increase as well. And one thing that's not on this slide is that, and I know that we've alerted the market and shared this in trading updates, that we have increased our credit facility from a 700,000 credit line to a 1.7 million credit line. So we have a lot of opportunities to grow the business, and we had a good cash balance at the end of the year and a growing credit facility as well. So who are we? And I know that the business has shifted, expanded, and grown. And today we are a diversified portfolio group. So we are the leading end-to-end solutions provider for branded merchandise across a variety of sectors, from the corporate promotional products industry and print vertical markets to the higher education sector. One thing that I'll talk to you about today is how we have been able to take the engine of what Altitude Group has, that technology base, as well as our supply chain know-how and marketing services know-how, and how we've been able to take that engine and expand what the group is able to achieve and do and address in vertical markets. So that's one really important factor, is how we're able to take that engine and then branch off into vertical markets. So this will showcase some of the success that we've had in the higher education sector for sure. As many of you know, we have two distinct areas for our revenue. And we'll start here today to remind everyone, if you're not aware, and to share that story with you. So we break up our revenue buckets into two: services and merchanting lines. Our services focuses on operating distributor and vendor networks in the promotional products industry. And these services are really based around our technology and software applications, our marketing services, our membership subscriptions, and our preferred partner programs. That's where we act as a service provider within that industry network. And then our merchanting arm is where we focus on the sale of the promotional products. And this includes our affiliate program, which we'll talk to you about today, and our adjacent markets programs, the AMPs. One thing I like to remind everybody on when I talked about that engine is technology is at our core. We have our proprietary platforms, our product search engine, order management tools, design applications, and e-commerce solutions. And we are always looking at continuing our innovation and how do we drive efficiency and scale for the business and across the services that we provide. So we're always looking at new technologies, and artificial intelligence is one where we're looking at the opportunity to deliver new tools to drive efficiencies and scale within our systems and within the industry as well. And then, as many of you know, we had a trading update at the end of our financial year in March via our AMPS program. We identified, targeted, and seized a significant opportunity in the higher education space. And this is where we successfully launched our Gear Shop solution. We expanded our pipeline and collaborated closely with our course material partner, which we'll talk a little bit about today as well. And this offering, where we are solely focused on where we specialize, our skill specializes on that technology, supply chain know-how, as well as marketing services to be able to offer enhanced services, and that has proven to be disruptive within the educational and collegiate markets. We've delivered significant, within the AMPS program, significant multi-year contract wins and maintained an ever-growing pipeline. And this is one of those very important points for us to make. The business, we were able to invest in pipeline growth, and that has proven to be very successful for us in winning these additional contracts throughout the year. So we've continued expansion and delivery of this Gear Shop solution, technology solutions and marketing tools and supply chain know-how, and delivering innovative retail experiences across the U.S. market. This portion of the business, this vertical market that we've identified and proven that we can be disruptive within, will continue to be a primary and growing focus within the group's business model. So the industry we serve, and we'll talk about those vertical markets as well as the promotional products industry market, where we have very, very well reputation and growth for many years. So the market for promotional products in the US alone is estimated to be worth more than $25.8 billion. Throughout the pandemic previously, we know that that dropped to somewhere around 18 to 19 billion. And then we've seen that bounce back since the pandemic has ended. And in 2022-23, the market is estimated to be at that 25.8 billion. So we've seen a nice rebound in the promotional products industry. It continues to be highly fragmented, about 3,000 suppliers. I always talk about how the 80-20 rule applies here. So about 80% of the business is done through about 20% of the suppliers, but that fragmentation continues to be true. And then about 23,000 distributors who are serving a very broad customer base, spanning small businesses and corporates, as you know, such as your Google or your Amazon or your main strip and street businesses where they are conducting their sales. It's important to note that our AIM membership, we talked about that, you know, at the acquisition of AIM, somewhere around 1,800, 1,900 members. Today sits at that global number of around 2,400. And then also, we are serving the higher education collegiate markets. This market is estimated to be valued at about $12 billion, with two primary legacy competitors, which has proven to give us the opportunity to be disruptive with our Gear Shop solution, and that's showing us great growth opportunity today. So combined, the group now has an addressable market of nearly $40 billion. We have a lot of opportunity before us, and we are as I mentioned previously, seizing that opportunity and proving to be disruptive in education and continuing to grow across the primary promotional products industry. There are additional adjacent markets that are active in promotional product sales. And we've talked about these before when we were discussing the adjacent markets programs that we have access to. And this has long been the strategy, which is, been very exciting to see our capability now at taking that engine that I talked about in the initial slides and being able to branch out, seizing the educational market as an opportunity. And then there's also the signage markets, uniform markets, and print markets, all with sizable opportunity for us as additional adjacent markets for the future. So how do we serve? This is a slide that I've shown before. This walks through your basic supply chain and that fragmentation that we've talked about. It really begins in that lower gray column with your overseas manufacturer. That is the facility overseas in China, Bangladesh, Vietnam, Mexico, where they're actually creating product within a factory setting. From there, they will ship products to the supplier in that blue column. Those suppliers, and we'll talk about our preferred partner programs as we go further into the presentation today, but those suppliers hold inventory within their facilities. When an order is placed from that mid column where you see the red, the green, and the purple, those suppliers will pick and pull those products. They will decorate them, putting that logo onto the product, and then they will ship it to that end buyer in the yellow column. So in that middle, we can dive into that just a little bit deeper so everyone understands what we're talking about. That red column showcases the member of our AIM organization when we talk about those 2,400 global members. And then in the middle green, that represents our affiliate model, which we'll talk about in a little bit later. And then you've got our Gear Shop solution in purple. So in that purple, they're delivering to the university spaces where we're serving universities and the communities, the campus communities around them. And then that larger yellow is your corporate end buyer customer who is purchasing product from either our AIM member or our affiliate. So how do we make money? How does all of this work? How does that supply chain that I just showed you in that last slide translate into growth for Altitude and how we drive our revenue? So first, and notice the red color of the column, this represents our AIM membership. In this first slide, how do we make money? We make money through our preferred pricing partner benefits. Delivering these to our AIM members. We deliver freight programs and shipping discounts to our membership. We drive community engagement and networking opportunities through our membership. We deliver education and professional development. And we also offer those expanded marketing services, products, and tools to our membership. And how do we make money from this core? We do that through subscription fees, providing this broad range of services, including networking events and negotiated group discounts. And we also are able to drive revenue through artwork services, catalogs, exhibitions, and our marketing programs. And you can see in the bottom there that our services revenue grew in 2023 to $8.5 million, a 35% increase in value across the AIM services. Also, a part of that 8.5 million, 35% increase is our preferred partner program. And this actually represents about 2/3 of that growth in 2023. We had a very, very successful year in driving orders through our preferred partner programs. And what do we give our supplier partners, our preferred vendor partners? We deliver them top-level visibility across our marketplace. How do we do that? We put them at the top of our search engine. So when an affiliate or a member is searching for product, they will see our preferred vendors first. We deliver them preferred technology integration opportunities, guaranteed participation in our publications, catalogs, educational product programs, and our merchandising campaigns. And then we also give them expanded access to the AIM community via social media and our events. Really what we do is we put our supplier partners and our preferred vendors together with our 2,400 strong AIM membership. And how do we make money? The group derives revenue through gross transactional fees on orders that are put through our supply network, vendors, and other service providers in return for providing those marketing services and the promotion of those suppliers to our distributor members. Revenues from this source reflect the value of the resulting purchase orders placed with our preferred partners by our distributor members. And essentially, it doesn't matter how that order happens, whether that goes through our tech, whether it's telephoned in or sent via email, we collect those service fees through our preferred partner program. And again, that service revenue increase of 35% to £8.5 million in full year 2023. And then how do we make money on the merchanting side? So what do we do with our affiliate program? This is our capstone program when we talk about taking our membership and driving them into that capstone program for our affiliates. What we do is we provide our affiliates the ability to focus on sales activities, which is their true skill set. They are salespeople. And what they're looking to do is to become a part of our corporate business, which is driving growth and profitability. That's our skill set. We enable them to focus on selling, and we manage all of the other elements that are happening in the background, which helps them to exceed their standalone potential. It's mandatory that they utilize full use of our technology. It's advantageous for them. It drives efficiency for their business, and it's mandatory from us to be able to track the business. And what does our affiliate program do? It delivers scalability, expansion, and growth back to the group. We drive our revenues from the sale of the promotional products. We're the principal, which is procured via our sales affiliates who act as our sales agents. And along with our dedicated team of affiliates that utilize our technology, our preferred partner network, we deliver efficient processes and financial expertise. And all of these things drive back for the growth of Altitude. In 2023, we delivered 82% increase in our merchanting revenue, and this was primarily driven through our affiliate program, which rose to $10.2 million in 2023. And then we have our adjacent markets program. This started small in 2023, but you'll harken back to the trading update that we delivered later in March, and what I noted earlier on today's presentation, that we were able to sign significant contracts in the higher ed space through our Gear Shop solution. So what do we do here precisely? We provide that specialist expertise on branded merchandise with access to our full product range from our preferred partners. So everything drives back to that engine that I talked about: supply chain know-how, technology services, and marketing services and solutions as well. We provide e-commerce, marketing know-how, and modern innovative spaces to drive brand awareness and community engagement across the campuses that we serve. And this has proven to be highly disruptive because the campus communities now are looking for engaging innovation and a different solution, because they've only had choice from about 2 different providers for a very long time. And we are proving to be disruptive with the solutions that we provide in this space. We also have a specialized partnership with a course material provider. So we pair up our branding, marketing, technology, know-how alongside of a course material partner. And what we do is we deliver a seamlessly single solution in our Gear Shop solution, but we have 2 very focused specialists, us and our partner in the collegiate spaces. And how do we make money? We make money from long-term contracts that require a small initial upfront investment from us, and specialized licensing via successful integration of our technology, marketing solutions, and from the sale of the branded merchandise through our adjacent higher education and collegiate markets. And again, in 2023, this was a smaller portion of the sales, but we saw that we've got these larger contracts that we brought in, and our pipeline continues to grow throughout the educational sector. We also make money through our technology, and this is at our core. What does our tech do? It provides efficiency, intuitive online ordering experience for buyers, coupled with back-end technology stack to support the quick fulfillment of orders for branded merchandise. This engine drives everything that we do across the business. It's effective, ensuring product inventory availability from whenever and wherever you are. So this is one of those incredible aspects of what we can do. A distributor, a member, an affiliate can go online, they can check through our system, find whether or not there's 500 t-shirts available in black in specific sizes, or if there's only 200 available, and they can make their decisions on the fly with pace, utilizing our technology stack. And we have trust and reliability from being able to service from start to finish our distributor membership as well as our affiliates. And how do we make money? We derive SaaS revenues through our marketplace access, e-commerce solutions, and our proprietary ERP system. So what have we been up to in full year 23 to provide expansion for the group? And I can say we've been working really hard, and Graham, please chime in at any time if you have anything that you wanted to share here at this point. But we have worked really hard through 2023, delivering strong financial health for the group, building a track record of trust and future growth through our financial banking relationships, as well as with the market, investing in our teams, great people to deliver talented teams geared for expansion and ready for growth, investment in our pipeline and partnerships. I mentioned this. We've been able to really drive our pipeline growth across our higher education market, as well as throughout our affiliate program, because of the strength of the business that we've built throughout the pandemic in full year 22 and to 23. We've really gone from that ready to scale to scaling now to that inflection point that I spoke about earlier on the call. And we're geared for greater efficiency, delivering scalability for our customers and for our internal teams through greater gearing, operational gearing internally, and strengthening our core relationships. One of the primary important aspects of what we do every day is making sure that we protect the core business that we have whilst we grow for the future. And Graham, I would welcome you to share any thoughts that you have in terms of what we've been up to, the financial health of the business, and some of our goals for the future.
Yeah, sure. So one thing that I know Nick has done over the years is to put teams in place and put great teams in place. So starting from the US a few years ago with just her, and then building that team around her, and that's exactly what we're doing on the AMP side of the business as well now. So we've started from a very small team of Nikki plus one business development, who's then driven and built this success that we've seen in our wins that we've communicated to the market about. And so this year, what we've been doing is building up that team to ensure delivery, to get the right leadership roles in place in the key roles in place within that team, so that then we can ensure delivery of those contracts or onboard them, and then ensure they deliver, and then understand exactly where we're going to, the value of those contracts to us. So and that's been core to our success, and will be core to our success going forward. And then that gives us a bigger platform to then springboard from on the AMP side for next year. So that's really about where we're heading in that direction.
And I can add in too, Graham, that what's interesting about what we've built on the affiliate model, as well as within the AMPS program, that higher education sector, is compounding growth. So when we bring in and recruit a high caliber affiliate, that represents compounding growth for the group. And in 2023, we saw our affiliate program double in size, essentially, right, Graham?
Mm-hmm. Yeah, absolutely.
And then,
it doubled in size, but because of the nature and where we've built the team up to right now, we don't need to double the people. So it's a kind of marginal increment in overhead, but we've built up that top line and the fall through. So therefore, there's much more fall through to the bottom line on the affiliate model.
And then that compounding growth is the same for our higher ed gear shop solution in the AMPS program. So that those are long-term contracts. They last for 5 years. Basically, in most instances, they're 5-year agreements. And so when we drop in more contracts as we win them, then those will continue to grow. I would anticipate them being 5-year agreements as well, and that compounding growth will continue on through 2024 and beyond. So as I mentioned previously, we don't anticipate slowing down the pace of that pipeline growth and investment into pipelines so that we can continue to grow our merchanting lines. So how we performed, Graham, I'll let you take over this one and you can run through the financials of the group.
Excellent. Thanks, Nikki. So regarding the numbers, this is a great slide to be able to present. The one big green arrow on the right is just denotes the real positive performance we've had year on year throughout our P&L. So really, it's been very strong. 57% up in revenue. An underlying rate. If you want to know underlying rates, then I have a table within my CFO report which shows the underlying growth rates. But for just to highlight a couple, sales are up 57%. That's 41% on an underlying basis. Gross profit up 40%. That's 26% up on an underlying basis. And adjusted EBITDA 83% up. That's 53% up on an underlying basis. So during the year, we came out to and revised the market guidelines 3 times, which really is support which the strong trading that we've managed to deliver really supports those re-rates. We've also, and just to go a little bit further into, as Nikki says, we've built in growth for FY24. So within the affiliate model, we've grown from just under $7 million to just under between 13.5 and $14 million on an annualized basis. So at the beginning of the year it was 7, at the end of the year it was 14, just below 14. So then really that's been that we'll see the full year impact of that growth within FY24. So you'll only see a part of it come through in the revenue in FY23. And of course, with the contract wins on the AMP side, then that will mostly we started off with 1 contract at the beginning of the year. We added about 3 during the year, and then we had the contract wins that we've announced at the end of the year, which we're currently onboarding now. And so they will be impacting FY24, and they won't have the full year impact as such. They'll have a 3/4 type of year impact as they're onboarded during the year. The aim is to get them all in and done within the next by about a week's time. We've got our last couple to go live, so then they're ready for the full rush, as it's called. So when everyone comes back to school and it really picks up business. So and so there's, and as I said, there's some FX analysis in my report that you can see in a bit more detail if you want that. So then if we want to dig in a little bit more detail to the divisional side of the business. So what you see here is that you've got the services on the top, and that has, as we've seen, that 8.452, that's grown by 35% or 22% on an underlying basis. Now, where's that come from? That's 2/3 of that growth has come from a strong supplier revenue. So that blue column, those supplier revenues are VIP vendors who we work with, that they really form the bulk of that growth that's come through in the services, and it's highly profitable growth. It falls through at 90%. A third of that, the third is upsell into membership and our VIP partners. That's all to do with creating activity within the market. More activity means more transactions, funneled through our VIP vendors. So what do we do to upsell into the market? That's the events, that's the product collections, the catalogs, that's marketing packages, and artwork tools. That all those add together and build up. We've had some good success of selling more in this year. Within merchanting, so as I mentioned, so revenue's gone up by 82%. That's 61% on an underlying basis, and that's really from onboarding new affiliates in the year. We had a very, we had that low impact from the low number from our AMP side. That has had an impact on the margin though. So you see that margin move from 7 to 9%. So on quite a low level of revenue, it impacts the margin. So you'll see that playoff between the affiliate model coming through at usually about 7 or 8%, and then on the AMP side that will come through at about 35%. So as that falls through and grows, then you'll see the increase in that merchanting gross profit margin. It just says, especially if the affiliate model stayed the same, then you'll see that straight. You'll really see the change in the gross profit margin. However, with the growth in the affiliate model as well, then they'll play off against each other. So how that impacts on the group side is we see the gross profit margin fall from 52% to 46%, and that's really that interplay of that growth that we've had on the merchanting side, of that doubling of revenue in merchanting, has really then plays off against the services, and so therefore you see that fall in the gross profit margin. But really,
right.
Sorry, do you want to say something, Nikki?
Yeah, and so that would be something that just to remember that the affiliate model really is that volume play, right? So high volume, lower gross profit margin, and then the AMPS program. There's vertical markets program, and particularly through the higher education sector, we'll see that higher gross profit margin, and so. We'll be watching that one as we get through Fall Rush and going through into, once we get all of these contracts initiated and active through the fall months, we should be seeing, watching that profit percentage margin and the growth of that through the AMPS program balanced against the affiliate program.
Cool. And so, and then on overheads, I'm going to talk about overheads as a whole. So that's operating, non-central and central costs. So they've increased by 1.5 million. Where is that increase from? So there's 0.5 million related to FX. There's 0.5 million, which is we had the government retention scheme credit in 2022. Which from the US government, which was only available in 2022. So that now you can see our normalized run rate of costs coming through there. So that 0.5 relates to that, and then a 0.5 million on which is basically the normal increase to do with the increasing and scaling of the business. So that's to do with investment in pipeline, people. And then regular other costs associated with growth, where there'll be a bit of legal and professional and some travel as well. Really, that falls through to having that adjusted operating profit increase of 83%, which is underlying a 53% growth versus last year, getting us to a 2 million rounded adjusted operating profit. So then if we look at our financial position, we've got a strong balance sheet. It's increased from 8.11 to 9.43 million, an increase of 1.33. We've increased our cash from 0.9 to 1.2 million. We remain debt free at the end of the year and now, but we have grown that facility to $1.7 million that we expect to use in the very short term as we scale into that autumn the full rush, and we increase our inventory for that. So then if I move forward onto the cash performance, so you can see that increase in cash at 0.2, so a cash generative, and really all those the working capital increases come from different parts of the business. However, they're all related to an increase in activity and growth. So there will be quite a bit of that. The trade payables and receivables are related to the affiliate model. We've got the increase in inventory, which is relating to the AMPS model, and then there's part of that trade and other receivables related to the services side, where we receive those services revenue that have various variable contracts to do with quarterly, semi-annual, or annual contracts, and so therefore there'll be a build up towards the year end as they become payable. I'll hand over to Nikki.
Awesome. Yeah, thank you so much, Graham. And I just, from my perspective, I would say when I talk about being at that inflection point, these are all the things that throughout the past few years we had envisioned in being able to diversify the group and tap into those vertical markets. I know I've been talking about the ability to build out the affiliate program and tap into verticals for some time. And so quietly, we've been working internally, particularly throughout the pandemic and beyond, is to build that out. And now we're starting to see the fruits of all those labors as we are winning those new contracts, bringing on more affiliates, driving all that business through our preferred vendor network, and utilizing that engine that I talked about previously, that core of technology, our ability to utilize our second to none marketing solutions, and pairing that up with our supply chain know-how has really enabled us to hit that inflection point and really start to see the hyperscale and hyper growth of the business. So preferred partner service revenues grew by 21.5% in the US compared to the reported 11.4 to 15.6% industry distributor sales growth. So what does this say? This says that our membership and our affiliate program are healthy and active and driving business and writing sales and pushing that through our preferred partners. Our new ACS merchanting affiliates doubling expected annualized revenue signed during the year with a full impact that we'll be able to see in 2024. And again, as we recruit and bring on more affiliates, that will have that compounding effect and will drop that revenue right on to altitude and drive that growth into the future years beyond. Significant new adjacent market contracts won and expected to start transacting by September. So as Graham noted, we are nose down right now. We are prepping for fall rush. We're making sure that we have everything set so that when all the students hit the ground running, that they are able to purchase their branded merchandise, they're able to enact and become engaged through our Gear Shop solutions, and essentially act as a branding arm for the campuses that we're serving. So that really comes down to when that student puts on that cap or that hoodie and they walk outside the door, that they're spreading that branding merchandising message throughout the communities that they're in. And that is highly attractive to the campus communities that we're serving and that those that are in our pipeline that we're talking to. The group remains debt-free, but as Graham noted, we have that increased facilities to support our growth, as well as we'll be dipping into that and dipping back out again. And the board is confident that the group will deliver substantial growth in full year 24 and win further material contracts for the future. So we are not slowing down. Our team is building out their pipelines, continuing to invest in that pipeline, and going out there and that business development element. Not only are we working hard to continue to grow through new contract acquisition and affiliates, as well as our services arms, but we're also working very hard to make sure that we perform to those contracts.
And just one extra point is that we've been really clear on the communications about coming out to the market with our we're all used to come out to the market with new numbers. We're keeping. We'll come out at the half year with our view on where we are, and also from our experience of onboarding and getting those contracts live and running, and so therefore we thought that's a better time for us to then review where we're heading and where we're landing for the year.
Certainly. Yeah, we'll have a lot more visibility come August, September, and so be able to report that back to the markets at the half year for sure. So our aspirations, we retain our high growth ambitions, and we are confident in our ability to substantially scale and expand the business. The management team is focused. We are all working really hard internally on driving scalable growth in our new financial year and accelerated compounding future growth. So as I mentioned, as we win, as we add more contracts, as we add more affiliates, that all compounds for that future growth. And we are focused on delivery and committed to achieving our aspirations to build a $100 million business. That is our goal. We're working tirelessly every single day to achieve that. And we're ambitious, and Graham and I, we work hard and believe that we will get there in the near term.
Absolutely. And I know as soon as we hit that, then it'll be 200 million, right?
Then we'll be going for 200 million. That's right. Never satisfied. So, and we're always pushing further. So questions, and Alejandro, I don't see the questions. If you could help me into pulling those up on the screen, and any others that may have come through, I'm certainly happy to answer those, and Graham can as well.
Yeah, so Nikki, in the bottom right-hand corner, can you see a blue button that says chat?
I can, yes.
Yeah, if you
There
click
we
on that,
go.
then everything will become more apparent. And what I'll
Yes.
do is I'll just bring your cameras back up now for the Q&A session. Ladies and gentlemen,
Awesome.
please do continue to submit your questions just by using the Q&A tab, which is situated on the top right-hand corner of your screen. But just while the company take a few moments to review those questions submitted today, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. Nikki, Graham, as you can see, we received a number of questions, both pre-submitted and throughout today's presentation. And if I could just ask you to read out those questions where appropriate, I'll pick up from you at the end.
Absolutely. I can hit on the first one. Given the superb results and very positive outlook, how do you reconcile the poorly performing share price? And so I think that that's one that, we've done analysis, and Graham and I and the board were always discussing these matters. And so Graham pulled together a quick analysis on this one, that the share price has actually performed quite well since we commenced forecasts in the 31st of March of 2022. We've actually grown by 23%, while the greater AIM all share has actually fallen by 27%. So it's a net 50% better performance by altitude. Is that right, Graham?
Absolutely, yeah, and that's in the context of the market as it is. So it's been a relatively long bear market where hopefully we're seeing some green shoots coming through right now.
Yes, and we'd be really pleased to exit the bear for sure. So, but performing well, and we are continuing to always communicate with shareholders to keep them, up to speed on how we're performing, and making sure that we're continuing to generate interest and tell the story, and tell that with clear, understanding of our growth, and that we continue to be focused on that growth.
Absolutely, and underlyingly the performance of the business will, everything else will come. So we're absolutely focused on delivery and that growth, because then it will slingshot at some point, sure.
But we ask those same questions too every day, so it's certainly on our minds, and something that we are always paying very close attention to. So then we have the question, can you please give us more information about the new contracts signed since the year end, and expand on pipeline of opportunities being explored? And I think, Graham, that you mentioned this one earlier. So we had one contract at the beginning of full year 23, and this was essentially our beta into the market to ensure that we could deliver and perform in such a way that would be highly attractive and disruptive in the marketplace. Since that time, we added 3 more during the year, and then winning a further 13 contracts. So when we go out there and we are responding to RFPs and pitching against those 2 large legacy companies, we are winning about 60% of the time. So we're feeling very, very confident and bullish on our ability to continue to drive and be disruptive in that marketplace. We built key roles into that central team. So Graham had mentioned that to go out and assist in driving future wins, and giving us additional firepower to accelerate growth and disruptive in that, prove to be disruptive in that marketplace. There's about 4,000 higher education colleges and universities throughout the U.S. So that is really what is driving that $12 billion marketplace that we have access to, and we intend to keep on going after that, and building out our pipeline of growth. And I can say that our pipeline continues to be growth oriented and strong in that space. And Graham, is there anything that you'd like to add in terms of the university space currently?
Just that, yeah, with the contracts being tending to be normally 5 years long, so there's usually about 400 or 800 universities that will be coming up for tender each year. So then, so therefore, say 1% of that, about, on the kind of way we're looking at it, is about somewhere between 20 and 30 universities. So yeah, it's it's an interesting market, and one that's ripe for disruption. We're building up our recognition. People know us. People are getting to know us, and they're liking it as well. So.
Absolutely, they are liking it, and yes, we are continuing to be seen and requested to present, and then winning those contracts. So we'll continue to push forward to drive growth there, as well as on our affiliate side. Our pipeline on the affiliate side continues to be strong, and we are always investing in pipeline, investing in people that can drive the business forward. And the third question that I see here today is there any possibility that Altitude would consider buying opportunistically small competitors in order to stimulate further growth? Certainly, we're always open to acquisitions. We're always looking at potential opportunities. Right now, we are really singularly focused on ensuring that all of our programs that we have, particularly on the merchanting side, are nose down focused and ready for delivery and growth. But there's certainly always the opportunity to look at potential acquisitions as we go forward, and hopefully too, as we exit this bear and enter into a much more relaxed bull market. One can only hope that we would continue to look at the market conditions and whether or not we would raise any equity. Then we have, what are the number of U.S. colleges and college entities forecasted to be signed up with Altitude? We've covered, yes. We've gone through that and talked a bit about that one, so we can move on to a couple of the new ones.
So I have a look at has the ACS growth been driven by Edward C. What expectations do you have on a merchanting GM ceiling looking forward, and how long do you see the merchanting GM growth continuing? So the clearest answer for that is that as we gain momentum and as we gain growth, certainly within the AMP side, then in the future at some point we'll probably split those two out a lot more. So then you'll see that split, because really because whether it falls or grows, it's not necessarily a significant point of our success or not. It just means we're being more successful in one of the areas. So in our affiliate model, maybe if it goes down, then we're being more successful in our affiliate model. If it goes up, it means we've been more successful in our AMPS model. So the two play off against each other. So this year maybe potentially the AMPS model may have with the new contract wins, would possibly have more of an impact in our margin for FY24. So therefore could see that tending upwards. But we haven't finished the year yet, and we can't say exactly how the ACS, the affiliate model will deliver.
So to stay tuned for sure, and particularly for as we go into our interims at the half year. We also have the question, has the ACS growth been driven by new sales recruits? Is there metrics to this, i.e. 10 new recruits would generate X revenue and profit? If so, what is the recruitment strategy? I would say on our affiliate program that it's twofold. So when we recruit an affiliate, and if that affiliate has a $500,000 a year annual turnover, then that automatically drops into our revenue. So because we're bringing them on, they're our sales affiliate, and they are running that business. But we're also seeing that because of the services that we provide, because we're offering them that administrative assist and some of the other background things that we do to assist them in growing their business so that they can solely focus on selling. They're no longer worrying about accounting matters and invoicing and things of that nature, that they're able to grow their business. So not only are we seeing new recruits driving growth, but also those that we have as current affiliates really starting to grow with us just because they're an affiliate with our program.
Yeah, absolutely. Somebody can have an order for say $750,000 for one order, which they wouldn't have been able to do if they were by themselves, and it's something that enables they can do that within the corporate environment that we provide. So there's that organic growth that we're seeing, as well as that the number of those affiliates joining.
Absolutely. So that's we give them the ability to grow, and that's proven to be attractive to them to become an affiliate of ours. So I see we have what is being done to drive market awareness. I think we discussed that a bit in that first question, to get some more activity around the stock. We're focused on the business and making sure that we drive the business forward, providing that growth year over year, creating a really strong and financially growth-oriented business. We're also communicating to the market regularly, keeping everyone apprised, meeting after meeting from our side with a variety of different institutions, as well as shareholders. So we're doing everything. Working with investor relations and doing everything that we can to get the word out. And I think that honestly, again, we've performed better against the AIM all shares, and really we're waiting for some breathing room within the market to exit that bear, which has been an elongated bear market. And Graham, I don't know if you have any additional thoughts on that one.
Just that we've been putting the groundwork in, we've been doing the communication, and there's a lot of interest, and there's a lot of excitement and interest, which is really good. So that's motivating.
Yes.
But the demotivating bit is more the macroeconomic piece. So I think the time the time will come, and all that groundwork will be come to fruition. So it's a positive environment, even though I understand where the question's coming from.
Yeah, and I actually see I see things starting to turn in terms of the market conditions. I'm starting to see that shift, and the interest levels are definitely rising in terms of opening conversations and excitement around not only around the greater market, but also around what we are doing in Altitude Group and our growth potential, what we see, our aspirations, and our ability to deliver on those. So my goal is always to continue to deliver, and I know that Graham is doing that as well. The two of us, just to continue to deliver. And year over year growth and meet the expectations of the market, and that's really the best that we can do, is to keep on getting the story out there and delivering. Well done on a great set of results. Can you talk about the competitive landscape? Interested to hear who you view as key peers in this broader $40 billion addressable market. Well, I think on the promotional product side, we've talked about that, it is highly fragmented. So really our services and merchanting, those service providers, there's quite a few service providers in the marketplace. We are, and I've always shared this as an AIM organization, the largest distributor network in the marketplace. When we speak with our supplier partners, we are always in the top 5 of their top 5 customers. So we are a large organization, largest distributor network organization, and so we sit very highly against other markets or other businesses in the promo market. And then on the AMPS side, there's really only 2 large competitive companies out there, and they are legacy competitors who are primarily driven by course materials and textbooks. So for us, what we offer is a very expansive and innovative program that's based on being an extension of the marketing arm for the universities that we serve. And this is highly attractive to them. So we're coming in and we're offering an engagement with the campus community that they've not seen before, and then being able to meet the students through our marketing services where they live, on their telephone. We've got ambassadors, we've got all sorts of cool things that we do to deliver a really modern experience, and getting their brand out there within the community. So not only on the campus, but also outside of the campus in the greater community, to help them drive their brand forward. So in terms of the AMPS program, highly disruptive, and our ability to continue to disrupt is one that we're pretty fired up about.
Absolutely. And on the affiliate model, there's a handful different types of models that people apply, and so that's open to kind of the private equity world as well, because it's quite a volume game of getting those affiliates in. And so we but yeah, and so there's a handful of others that we see.
And then I see, how do you see any impact on promo product production of your forthcoming presidential election campaign? Whew, it's going to go up. It'll be interesting one to watch. And certainly I believe that, and there's always a spike in promo against the presidential election campaigns. So we'll be watching that one. I don't have any percentage numbers for you, but could certainly dig into to see how the political space, that sector grows in that 4-year cycle. And the last one, I know we're coming up on the end of our time together. I see a comment from Edward C. Overall, thank you both for how you're driving this business forwards, and it's greatly appreciated. We are again, nose down on delivery, fired up to go into the future, and very much looking forward to what's to come. And I have to say that I appreciate our shareholders and all that you do in supporting the business. So thank you, right back to you. Thank you for your support, and we will continue to keep you updated on the market and how we're doing as we go through these next few months.
Perfect. Nikki, Graham, thank you very much for updating investors today and being so generous with your time. I think you managed to address all those questions. Could I please ask investors not to close the session, as you'll now be automatically redirected to provide your feedback in order that the management team can better understand your views and expectations. So it'll only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of Altitude Group PLC, we'd like to thank you for attending today's presentation, and good afternoon to you all.
Many thanks.